Be Wealthy and Smart, episode 624.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about, is it time to refinance your mortgage? And yes, we're talking about this once again because rates have dropped to the lowest rates they've been in the past year. And anytime you see rates move about 0.75%, it's time for you to look at your interest rate that you're paying and question that and see if it's time to apply and get a lower rate. After all, you can save thousands of dollars by paying less interest, and that compounds over time. And sometimes you're able to refinance without paying any points or large fees. So it can make sense to continue to refinance if the savings are in your favor, which they definitely are right now. I found an article on CNBC.com written by Diana Olick that says new plunge in mortgage rates could save borrowers thousands of dollars. And it has 3 key points. 1, the average rate on the popular 30-year fixed mortgage was at 3.75% last Friday. By Thursday, it had dropped to 3.62% according to Mortgage News Daily. Second key point, rates are now about 1.25 percentage points lower than they were at this time last year. And third key point, for the average borrower taking out a $300,000 mortgage, that is a savings of about $225 on the monthly payment or $2,700 per year. And again, a lot of you in some of the coastal states have much bigger mortgages than $300,000. So if you have a $900,000 mortgage, triple that number and that's your savings. These are big dollars we're talking about, things that can save you tons of money. And again, with rates so low, I don't see any reason why you need to pay off your mortgage when you're able to get incredibly low rates like this. To me, it just doesn't make sense. You have other priorities. You can put that money into your retirement plan, into your children's college savings, other things that you need big savings for rather than trying to pay off your house now. You can prioritize your money to those other big accounts that can really get your wealth growing for you and let this tiny little 3% interest rate work for you in your favor. So here's the article. It says, fall home buyers are getting a bonus. The sell-off in the stock market is causing an unexpected turnaround in mortgage rates. Mortgage rates fell throughout much of the summer, but then made a sharp jump higher in September. Now rates are headed back down, along with the Dow Jones Industrial Average, which fell more than 800 points total on Tuesday and Wednesday, the 2 first days of October. The average rate on the popular 30-year fixed mortgage was 3.75% last Friday. By Thursday, it had dropped to 3.62%, according to Mortgage News Daily. This is an average for buyers with solid credit scores and at least a 20% down payment. Now, I want to pause there and say, I always do recommend that you do put down a 20% down payment. Not only does that give you a good cushion in case of volatility of prices in the market, for example, if housing prices went down, you hopefully wouldn't be underwater if you had made a 20% down payment, but that's not always true. It depends. If we have a big crisis like we did in 2008, that might not even be enough to keep you from being underwater. But it is a great idea to be conservative, to try and put down at least 20% and stay away from some of those mortgages that are really crazy where you have to pay mortgage insurance. The preferred method would be to wait, save your money, get that 20% down payment together, and then buy your house. The article goes on to say, more dramatic is the comparison with 1 year ago. Rates are now about 1.25% lower than they were at this time last year. For the average borrower taking out a $300,000 mortgage, that's a savings of about $225 a month or $2,700 a year. That is big savings for borrowers refinancing their loans, and it gives buyers significantly more purchasing power in an already pricey housing market. Lower rates are already boosting sales for the nation's home builders. Lennar posted higher than expected new orders in the third quarter as interest rates dropped. The market for new homes has been improving from last year's pause as lower interest rates have stimulated demand and improved affordability, while the overall fundamentals of the economy have remained strong, Lennar Executive Chairman Stuart Miller said on a call with analysts. He also said low rates outweighed concern over a potential recession. I know that there is a lot of question about upcoming potential recession and things like that. Our customers don't seem to be viewing it that way, and I think that the housing market in general seems solid and strong and continuing to improve, Miller added. Well, I want to pause right there. This may be true for where he's building homes, but there are markets around the country that are really suffering. And I was just reading today about New York being one of those. In fact, New York has a 2-year glut of condos on the market and 3,000 condos over $3 million in price tag. New York has been in a slump for 2 years, and it looks like that is not going to abate anytime soon. The article goes on to say, at an open house in Atlanta last weekend, buyers definitely had mortgage rates in mind. The home was listed at $215,000, just below the national median price. That made it ripe for both first-time buyers and investors. You can't beat a good rate, especially with the speculating of a pending bubble burst. I think now is a good time to get in if you're looking to purchase a property, said Andrew Hughes, a real estate investor touring the home. Well, I want to pause there and say, if you haven't listened to my podcast about how the bubble bursting in real estate has been delayed, go ahead and listen to that, because real estate is very dependent on interest rates. And we were in a negative trend for about 16 months in a row. But with interest rates declining, that saved the housing bubble from popping, and it delayed that a little bit longer. I do think that things are getting very frothy, and probably after the election is when we'll see some of the air come out of that bubble. But I don't anticipate it's going to be happening right now, not with interest rates declining like they are. But anything that you purchase today, just make sure you have a long-term perspective. I wouldn't be buying anything for the short term. And I would be very, very cautious and try and negotiate if you have to buy a house today. These are definitely not cheap times. And when interest rates do eventually normalize someday, that is going to affect the price of the housing market. That's the way that it works. The article goes on to say, Nadia and Bryant Mormon want to stop wasting money on their rental and make a solid investment. They see an opportunity with low rates and a slight cooling in home price appreciation. If you're waiting, oh, this might happen or that might happen, it would be a year, 2 years from now, and this beautiful home, there's at a very affordable price point now, will be $300,000, and then it's out of your budget, said Bryant. You can't be paralyzed what may happen and what may not happen. Home prices are still rising, but the gains have been cooling. More demand could reheat those gains again, especially given the low supply of homes for sale. Mortgage applications to refinance a home jumped 14% last week, according to the Mortgage Bankers Association. That was before the move even lower this week. Most lenders recommend that if a borrower can lower their rate by at least 0.75%, a refinance is probably worth the work and the fees. Mortgage rates generally follow the yield on the 10-year Treasury, which is now the lowest in about a month. Friday's monthly employment report could push it even lower or just the reverse, depending on what the report says about the strength of the economy. End of article. I think this is a great seller's market for people who want to sell their home. This is the time to sell. With rates as low as they are, it makes it more affordable for people. People that have been waiting are going to be shopping for a home. It's the cost of money. So as money gets cheaper, people are incented to be out there and buy a home. Again, they're able to afford more, and that means that housing prices stay propped up longer. But when you look at a chart of how unaffordable housing is in general, again, markets across the country are all different, but when you look in general at housing affordability, it has not been as unaffordable as it is right now since 2008, right before the big crisis. And again, I'm not saying we're going to have a crisis this year or even next year. I think it's likely it will happen after the election. But we are at a point where the salaries that people make are not covering the cost of housing for a lot of those people. So people are choosing to rent, or they're going to have to make other arrangements. So what do you need to know? I think you need to check what interest rate you're paying. Number one, make sure you have a fixed rate mortgage, no adjustable rate mortgages now. Number two, if you have a fixed rate mortgage that's more than 0.75% above 3.6%, I would call up your mortgage broker and see what they can do for you and what it would cost to do that. Number three, I wouldn't be making any housing purchases based on the short term. If you're just going to live in a city for a couple of years, I would not be buying a home unless you plan to keep it and rent it out after you move away. I wouldn't be buying a house for a couple of years thinking that you're going to make a quick profit on it. And number four, you definitely want to save and put at least 20% down on any house. With prices as high as they are, any kind of downward movement in housing prices will be cushioned by having a bigger down payment. So that can always work in your favor when you're more conservative when you purchase your home. And number five, if you can negotiate hard when you're purchasing a home, buy a used home that needs remodeling so you can get your own equity in it, some sweat equity in there, and not have to pay top dollar for a brand new house, that's probably a good move. But again, one of my recommendations for just general decision making about housing is that you stay in a house long term. Every time you move, it's costing you tens of thousands of dollars. So when you're buying a home, make sure this is something you want to keep for the long term. Look at it as at least a decade-long purchase, or maybe a lifetime purchase, your lifetime house, your forever home, as now they're marketing. Think about long-term with housing. It's more important now than ever. With prices being high and interest rates being at these dramatic lows, we are at extremes. So just pay attention to that, but take advantage of the cost of money declining. This is as cheap as it's been in a year, and that can save you hundreds of dollars a month and thousands of dollars a year. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available so you don't miss any of them. And if you're looking for a roadmap of finance, what to do, what decisions to make in your life, how to get your investment portfolio put together, check out my book, You're Already a Wealth Heiress, Now Think and Act Like One, 6 Practical Steps to Make It a Reality Now. There is a link in the show notes, and you can find it at Amazon or any bookstore. And if you're interested in really getting into making your money work harder for you, getting your investments set up solid, and getting to higher rates of compounding potentially, talk to me about joining the VIP experience. That's my inner investing circle that works with me very closely. You're getting actual asset allocation models for growth, our favorite sectors, and instructions on exactly when to buy. All you need to do is fill out the short questionnaire in the show notes, and we'll set up a time to talk and see if it's a good fit for both of us. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.